Hello, everyone, and welcome to the Payment Insights 2024 webinar. Today, together with two Brite Payments experts, we're going to take a deeper look at consumer payment preferences, what's driving their choices when paying online, and how Pay by Bank is reshaping checkouts across Europe. My name is Lisa Calderwood, and I'm a communications manager here at Brite Payments, and I'm also going to be the moderator for today's session. So let's meet our hosts. It's a pleasure to me to introduce two of our leading experts from Brite who will be sharing their insights with us today. First up, we have Luc Treifert, who is Brite's Chief Commercial Officer, and he leads the company's commercial strategy, driving growth and innovation here. Welcome, Luc.
Thanks very much, Lisa. Yeah, pleased to be here, and we've got some good topics to cover today, so looking forward to getting into those.
Excellent. And next, let's give a warm welcome to Manfred, Head of Merchant Solutions here at Brite, known as Manny to many people, and he leads Brite's initiatives to enhance the merchant experience. Welcome, Manny, as well.
Thank you, Lisa, for having me. Pleasure to be here, and also thanks everybody for watching.
Yeah, great to have you both here today. Before we dive into the webinar, let's take a quick look at the agenda. So first up, we're going to find out more about how consumers pay today and what's driving consumer choice. Then we'll talk more about the rise of Pay by Bank. And finally, we're going to conclude with some 2025 predictions. But before we get into it, let's understand where all of today's data comes from. So earlier this year, Brite Payments partnered with YouGov to survey 6 key European markets. And from this research, we developed the Instant Economy Payment Insights report, offering a comprehensive analysis of online payment preferences. And recently, we also included a separate in-depth analysis for the French and German markets. And today, with our two experts, we're going to look deeper into those key findings from the report and share their insights and top tips, along with future predictions to help you stay ahead. So let's kick off with how consumers pay today. Consumers are using a range of payment methods right now, and our report looks across the main categories of online payment methods, frequency of usage, and differences across the markets that we surveyed. So let's go ahead and take a deeper look at debit cards. So one thing is clear with debit cards. They are the daily drivers when it comes to paying online, and it's typically the highest of all online payment methods when it comes to daily and weekly usage. Some quick stats here. We have 34% of Spain and 20% of the UK using debit cards daily. My question to you, Luc, is why is it that debit cards remain the daily driver of online payments across Europe for many consumers?
Yeah, I think it starts with the fact that cards have been around pre-internet, and people were issued bank accounts, and then cards came around where they were issued cards with those accounts, and obviously a debit card is connected to their bank account, right? And so everyone will at some point in that journey of having a bank account have a card, so it becomes somewhat of a habitual sort of default way of paying, and it continues to be so. I think it's a case where people will use it for convenience. Most of the time it's habitual, and obviously we've seen the emergence of technology that's allowed for cards to be used more regularly, more widely, card being present online, even recurring transactions that can be used as a billing mechanism. So I think a lot of it substantiates itself from just being a habitual thing that people get cards with a bank account, and they can use those to pay. On the other side of that spectrum is how much the merchant payment offering, right? Ultimately, most places in Europe and most merchants in those European markets will have a function to accept a debit card payment. So again, that match between what the consumer has in their wallet or on their phone, and then what the merchants offer is where that's kind of being used on a regular basis.
And moving on to credit cards now, they are still widely used, and we're seeing a consistency in usage across all of our surveyed markets. In France, daily and weekly usage combined was at 40%, and the Dutch and Germans are the most credit card averse, with 44% having never used them online. We'll have a look at some of the nuances of credit cards a little bit later in the webinar, but something slightly different next: buy now, pay later. A payment category that's generated a lot of interest over the past few years, but is favoured less for frequent purchases. It has a very high proportion rate of people who have never used the payment method at all. And in France, we saw 79% answer that they've never used it at all either. So, Manny, I think you'd be a really good person to answer this question. Buy now, pay later is well established and has proven a strong fit in certain segments like the fashion retail area. But will that remain the case?
Yeah, well, based on my pink history before I joined the Brite side, I'm able to answer this question. So I would say like buy now, pay later has become a global phenomenon, kind of, and I think also players like Klarna help with that. But I think the low percentage which we see in France, for instance, is also due to the fact that it's not that big, like the card payments. It's not a huge global thing, but it's picking up, especially in the segment which you pointed out, like fashion. It is definitely a payment method which helps merchants to create a better conversion because it attracts customers, because this payment method offers a customer pretty much the option to buy something now but pay it later. So financial independency kind of. On the other hand, it is also easy to use, and it also is a secure payment method because you get the goods first before you have to pay for it. And that's why I think in certain markets and in certain categories, I think it will definitely be a payment method also in the future. But you should also have in mind always, like it doesn't only increase conversion, it also increases refunds. So that is something a merchant should have into their consideration when offering this payment method. Yeah, but I think it will remain and it will be a payment method which is relevant in different markets.
Now, digital wallets are a more modern online payment method, but a broadly defined category. Spain and the UK showing high daily usage with 14%, but Germany has the highest combined daily, weekly, and monthly usage at 53%. Manny, also another question for you: Have digital wallets gained traction across various markets in 2024, and do you think this is going to continue?
I think so. But first of all, maybe we have to look at what is a digital wallet. So PayPal is a digital wallet because you have several funding sources behind this payment method. So you select PayPal and then you can select, do I want to add a credit card to my PayPal account or a direct debit? And this might also already be an explanation why the share of PayPal, for instance, in Germany is very high. Germans love direct debit since the past, so to say, and PayPal was one of the first payment options also at eBay. It was part of eBay in the very early days. And a lot of people use this payment method with direct debit to pay online, at least in Germany. It also has security aspects to it, and especially the younger demographics, which are very keen on having an app and doing stuff in an app and with a wallet. They will use it, and I think they will also continue using it.
Now, taking a quick glance at Pay by Bank, it was the second most favoured payment method overall in our survey, with interesting stats showing that 84% of Dutch are using it at least monthly and 72% of French have never used it at all. So quite varied also, but we're going to explore what that means a little bit more later today. And finally, installments, one of the least used online payment methods. Manny, why is paying by installments the least favored method across our markets that we've surveyed?
Yeah, I would say installment is usually connected to very high tickets. So when you buy a big furniture, couch, or maybe also a car, and people are still hesitant to really do this very huge purchases online. They really go to a store and want to check the car or check the couch. Sometimes it also has a very cumbersome application process. You need to provide a lot of information in order to be accepted for this installment. And usually the installments, they are over several months and also connected to very high interest rates. That might also be a reason why people are not using it that much. There are new ways of installments around, which count a bit more into the buy now, pay later section, which is pay in 4 or pay in 3. These are most likely or very likely interest free, but these belong more to the buy now, pay later world and less to the classical installment world.
And focusing on 4 key markets within our survey, how do things vary across France, Germany, the Netherlands, and the UK? And starting with the UK, and particularly focusing on credit cards here, Luke, what makes Brits unique in how they use credit cards as a payment method compared to their fellow Europeans online? For example, the use of incentives like rewards.
Yeah, I think rewards have a part to play in this. I think when you look at the UK market, it's different to its counterparts, and you mentioned the Netherlands there or Germany, where typically a pay by bank or a method digital wallet so on are more prominent. The UK is very much built on sort of a good core banking infrastructure that then has not only credit cards but also debit cards aligned to it, and I think users as consumers are very, very akin to using that as a sort of default payment method. Having said that, we are seeing in the UK a want and a need from users to kind of have optionality, to have a bit of a point of difference in terms of how they can pay for different items or different services at different times. So, I think that this is ripe for change. However, credit cards and debit cards are very, very strong in the market, and they'll hold their position for many years to come. But yeah, like I say, I think consumers and users are looking for other ways to pay that could be either more convenient or safer or less open to things like fraud or needing data to make a payment, right? I mean, a lot of people nowadays are kind of getting a little bit lazy when it comes to payments. They just want to be able to pay. They found an item or a service they want. They typically just want to pay. And so in some cases, merchants haven't caught up with all of the technology that has come with cards. And so you have to get your card out, and that doesn't always seem as easy as some may feel, where they're sat on the sofa watching a movie, they found something they wanted to buy, they don't have their wallet on them. So quite often consumers will then start to bridge towards pay by bank or using a digital wallet. There are obviously now cases with the likes of Apple Pay and Google Pay, which have helped substantiate that sort of share of checkout being very card heavy in the UK. But not all merchants offer those methods or the ability to sort of tokenize and store card information so that the user doesn't have to input manual data. So it's going to be a really interesting evolution over the years to come to see how the UK differentiates itself again, or whether cards just continue to dominate as they are.
Yeah, I can definitely relate to that, being on the sofa, ready to buy something, and then it's like, go and get your card details. And it's like, so sometimes that ease of use, that can get people over the edge to actually pay, for sure. And moving on to France for a minute here, coming out on top for credit card usage with 62% using it at least monthly. Again, Luke, how do preferences for cards in France shape the overall payment landscape for merchants?
Yeah, again, I think France is a market which is, kind of dominated by its core French banking community that then sort of attaches itself to payment methods that could be, cards, credit, and debit, and so on. And also they have their own scheme in France. I mean, it's really important to understand that, France has some unique footprint when it comes to card payments with carte bancaire, carte bleue, which typically that's where consumers are still in that habitual sort of way of paying and using a card as a default method. Probably slightly less open to new payment methods as we would see in, say, the UK. But I do think this just presents itself with an opportunity to see how can technologies, especially in payments, evolve to allow consumers to have optionality. So France is still a very strong bastion for card usage, underpinned by French banks and ultimately the cultural element of how people pay in France.
Now, the Netherlands is an interesting one. Together with debit cards, Pay by Bank is its most frequently used online payment method. Manny, can you tell us more about why Pay by Bank has become one of the most frequently used payment methods in the Netherlands?
I would say for me personally, it's pretty much of a prime example of Pay by Bank solution and how it should work. Because I think ideal, that's the payment method in the Netherlands, which is the Pay by Bank solution. It's really deeply rooted in the Dutch financial culture, so to say, and it had been established like many years ago. The interesting thing is that even the Dutch government promoted this payment method to their people as a secure way to pay, and that of course attracts customers because, as we said, like the customers, they would love to have a convenient way to pay. They want to have a secure way to pay, and in best case, this payment option should be available in pretty much every store, which is also the case due to this promotion and the push to the people. So yeah, I think that's why I think the Netherlands, they are very far ahead when it comes to a pay-by-bank solution.
Now, finally, Manny, another question for you. Germany has the highest proportion of consumers who never use either a debit or credit card to pay online, but they do have a notable preference for using digital wallets, with 53% of consumers using digital wallets at least once per month. Why is that?
The Germans again. So probably it's the German angst, which we have for new things. And no, I'm just kidding. So I would say the Germans, we're a cash country, or we have been a cash country for a very long time. So when I would go to my bakery 2 years ago, and if I would take out my card, they would look at me like if I would be an alien. That changed a lot, also thanks to COVID, to be honest. So I think we're in a much better position also when it comes to card usage. And I think the other thing is that the Germans typically they want to control where their money goes, and they want to really see, okay, the money is now away from my bank account, and that's why they're not really used to credit cards, because then you get the statement at the end of the month, and then you don't control it that much. The reason why maybe the wallets are, especially PayPal, is very prominent in Germany is, I would say, two reasons. Number one, PayPal right now is in Germany the most popular payment method. In the past, it was pay later. I would argue that the reason why PayPal is now the most important or the biggest payment method in Germany is because now they offer a buy now pay later solution within their wallet. The other thing is that, as I said before, Germans love direct debit. So many of the Germans really use PayPal connected to their bank account to make a payment, also micropayments via PayPal. And I think that is also established since the eBay times back in the 90s, I would say. So I think that is the main reason why also this payment method is very high ranked in Germany.
And staying on Germany, let's think about some generational differences for a second. We're seeing a high percentage of 18 to 29-year-olds and 30 to 39-year-olds using digital wallets at least weekly, more than any other generation. Manny, why the large differences between the usage of digital wallets between generations?
In the end, I think the younger people, unfortunately, I cannot count myself into that anymore. But yeah, they love mobile apps. They have the mobile first approach. And I think this is also what these wallets really support very much. So you have your app, it is convenient, it is fast, it is also secure. But I think people, especially the younger people, they want also to try out new things. They're open for new things. Many of them already have a PayPal account, and that's why it's super convenient to use it. The older demographics, they are less tech savvy, so they are maybe more to traditional payment method. And in Germany, we have a bunch of very traditional payment methods, and like invoice, for instance, or even prepayment that you pay in advance via bank transfer, and then you get your goods. That is maybe the payment method the older people are using. But yeah, I would say in the end, it's really the tech savviness of the youngsters who are using the digital wallets mainly.
Yeah, I think I still just about fall into this 30 to 39-year-old category, and digital wallets, tapping into use the train or anything like that. It's just like instinctual. I do it every single day now, and it's such a hassle, like trying to get your card out of your purse and actually pay. So it's something I think 10 years ago I never thought I would use so much, but definitely now. So a very interesting stats there. And staying on the theme of generational differences, it seems that each age group has established different preferences when it comes to payments. And while focusing on Gen Z, Luke, how can merchants adapt their payment offerings to appeal to the preferences of Gen Z consumers?
Yeah, I think what you can see here is that the need for optionality is paramount. So it's finding that balance or that blend between offering enough to, I guess, compensate for the different needs of those users that any business would have, regardless of, what it is you're selling, services, goods, so on. And then also not having too many so that it becomes overwhelming and there's too many options and people don't know where to direct. So, the biggest thing is about sort of understanding users and understanding their preferences, and then from those preferences you can start to put a strategy in place to offer what is going to be the highest in terms of its usage, its conversion, and therefore customer satisfaction. At the same time, merchants have got to balance this out with cost, and that is the sort of dilemma that when we have conversations on a daily basis, it's trying to find that balance. And so Manny talked earlier about the prevalence of PayPal in Germany. That is a consideration where you want to be able to provide people with that preference. At the same time, you're trying to manage the cost for the business to take a payment. And so, the emergence of some of these new payment methods underpinned by the likes of open banking or buy now, pay later, and these sorts of methods are ways in order to kind of put a strategy in place to offset that, right? So you actually have a cost sort of benefit from offering new methods, but also not too many or too much that's too overwhelming. And what I think is the most important part to this is, merchant adoption is one thing, but then guideposting and signposting users to understand the benefits of picking a certain method. Quite often we see two different approaches broadly. One is, if a method is quite expensive, but there's a preference to use it, there's a surcharge or an additional fee that's then put on top to use that as a preference. And then it's down to the consumer whether they're willing to pay more to have that preference be used. Conversely, we see some merchants being even more creative with the likes of reductions, right, in fees, or a discount of some sorts, or loyalty, and these sorts of things that can build up so that they can help guidepost the user to use a different payment method that's perhaps cheaper for the merchant, that's still going to have a great experience with regards to paying, but maybe just aren't educated on exactly why they should pick that method, right? So merchants are going about it in very different ways, and I think it's going to be really interesting to see as the Gen Z sort of community starts to go through their ages and see how those preferences perhaps change over time or perhaps don't change at all, right? So yeah, interesting sort of space to be watching and seeing how merchants are evolving to service the needs, but also keep their costs in a place that they can survive as a business in this current climate.
What I also, maybe just a final sentence to this slide, because what I just realized, like the top 3 payment methods are pretty much direct payment methods. So there is no credit involved. And the top 3, the bottom 3, they are more credit payment methods. Yeah, you have to apply for credit, use a credit card or an installment. And I think that is also what we see, that the younger generation, they are more responsible or take responsibility for their own financials. So they don't want to go into debt. They don't want to get a credit. They are also very pro environment, etc. So that is also what we see, what I read at least out of this chart here, which is also super interesting.
Yeah, a lot for merchants to consider when it comes to Gen Z, for sure.
Yeah.
And next up, we're going to turn our focus a little bit onto why people are choosing specific payment methods. We can see a lot of reasons why consumers decide to choose an online payment method: security, ease of use, and speed coming out on top. Manny, what are the most interesting factors that influence online payment choices, do you think?
I mean, as we see here, like security, ease of use, and speed, it's pretty much a no-brainer, and pretty much every payment method tries to achieve that. And that's a good thing, and that is, of course, what customers want. What I believe is also interesting, the customer support case here, for instance, because since I'm working in the solution department and we're responsible for helping merchants to integrate a payment method, we saw it so often that merchants do not really focus a lot on the user experience, on how do I really implement the payment solution end to end, because a payment solution is not just something in the checkout. It has impact on operational topics later on. So it's nice if you accept the customer in your checkout, you made the deal, but then if you screw up everything when there is maybe a refund in the end and the customers are calling your customer support and they are not educated or the processes do not work, then you will lose this customer forever. And I think that is super important, at least from my perspective, to focus on also for the merchant, that they have a focus on really the end-to-end perspective of a payment. And the other thing, what I also see, that anonymity, that is also important for many people, and especially a pay-by-bank solution allows this anonymity, because you don't have to sign up for something. You don't have to provide sensitive data, and that is also where a lot of people are very keen on to not provide too much information, but still be able to pay. So these are the two which I would maybe pick in addition to the obvious ones.
And interestingly, security becomes relatively more important in the older demographic group, just as ease as use. So what can we read into that?
I would say, security is, especially if I talk for the German folks again, as I said before a bit, they want to have the control over their money, and especially we're transferring money from A to B. So if I lose this money, that's a big problem for me. I think the younger demographic, of course, they also want security for sure. But for them, it's more like this, the fanciness of the process, and maybe less the security in the background. And that's maybe the difference, how I would see it probably.
Sure. And yet consumers still regularly experience issues when they're making online payments. And the top three here we can see the need to create an account to complete payment, needing to use an app to make a payment, and too many steps or redirects. So another one for you, Manny, if you don't mind. Firstly, are you surprised by the percentages that you see here of the issues that people are regularly encountering? And what are the implications for merchants if they don't actually address those issues that people are having?
Actually, I have to say I'm not surprised, because these are pretty much the topics which I have to deal with since several years. And I think in the end, it's all about friction. And if you look at it like a marathon, your customers, they're running a marathon through your website. They're at the finish line and they just want to grab the tape and say, yes, I've won. And yet then you just build a wall in there. They won't be happy. So I think the impact would be that really you would have a bad conversion if you do not focus on implementing and try to remove all the obstacles out of the way from a checkout. And that is what I really also see or saw in the past very often, that merchants just try to add a payment method in the most fast way and then done. But I think these topics which we see here in this list, I think there are a lot of things which a merchant can do. So make sure that the presentation of the payment method is correct in the checkout, that the naming is correct. It sounds like a super simple and straightforward thing, but there are so many tiny little things which merchants can do, like also present the payment method in the right way, maybe add a few USPs, like why should a customer use this payment method? Test the user experience maybe yourself, that you also already have a feeling of what journey the customer goes through. And in the end, try to make sure that it's really technically done in a stable way. And for that, I always recommend really to use and select a payment partner who guides you through the process, who really supports you, consults you, and educates you and tests everything together with you to ensure that this doesn't happen and that your marathon runners can run through the goal easily.
Yeah, lots to work with here, and some really good tips there, Manny. If we consider the issues that they face, it's not surprising at all that consumers actually want new ways to pay. And the graph that we see right now shows the percentage of people who are willing or very willing to try a new online payment method across our surveyed markets, with Spain coming out on top with 50% in the Netherlands and Germany quite close behind. Luke, does the number of consumers willing to try a new payment method surprise you at all?
I wouldn't say it surprised me. I think people are looking for ways in which they can have a good experience, and it goes back to that previous slide. I mean, ultimately, a lot of people are looking for ways in which they can shorten the steps they need to take to pay, but meanwhile pay in a secure way. So if you attach those two things together and you think about the emergence, say, of a market here. Let's take Spain, where there's an emergence of new payment methods coming into the market. One of them, a big one that's kind of taking off quite well, is Bizum. Outside of that, it's very, very card sort of denominated, right? And so if you think about then the inclusion of the likes of 3DS or 3D Secure, where you then have to go through a process, whether it's opening an app or getting a text message with a code and then put the code in, they're there for the right reasons, which is security. And we've seen that security is the number one topic, right? So it's a balance between having enough security, but then trying to make it as frictionless as possible. And so I think a lot of people's minds around how can I find a way that is equally or if not more secure without having to have manual steps or manual data input and actually typing things in come to the fore so that I can pay more conveniently. Or meanwhile, I can have a clean understanding of what I paid for, what money I have, and so on and so forth. So no, I don't think it's overly surprising. I think what is interesting is, the numbers being here around, pretty consistent between 30 and 50%. So somewhere in that. And I think that consistency, then you could pick apart some of the markets here. Germany is a very interesting case at the moment. There's been a lot of changing of the landscape of payments in Germany. Manny's mentioned that over, the decades that have gone by. But right now, there's some core providers that are either being acquired or they're being deprecated. And there's a real push to try and say, I think mostly from merchants as well, to kind of say, well, how do I have more options to be able to accept payments for consumers? Rather than being relying on one or two major methods in a given market, they want to have that optionality themselves to manage cost and performance, as well as the consumers, asking for things that perhaps they could find a more convenient way to pay. So, in summary, not overly surprising, but I do think there's some really interesting points to pull out here on an individual market basis.
Mm. And in the report, we also asked consumers what their most important factors were when it came to trying new online payment methods. And we have quite a few preferences here, but three main ones stood out across all of the markets for us. You can see here 86% highlight security as the most important factor when trying a new online payment method. 82% of all respondents cite cost or fees as essential. And finally, 60% said ease of use is an important driver also. So considering these stats that we see, Manny, what role do merchants and their payment partners play in educating consumers about benefits of new payment methods?
I would say it's a huge role they play. And I think they have the power of educating the customers. And as I mentioned before, like in the Netherlands, where the government took over this role as well, like to educate the folks to say, like, this is a secure payment method. I think every merchant can do it themselves and present the payment method, as I said before, like in a best possible way in the checkout. And what I also see more and more companies really hire a payment manager who really make sure that a payment method is really integrated in the right way and also used in the right way. What Luke said before, like how to position maybe a payment method, how to play with a payment method, that's fully on the merchant. And in the end, I think a merchant would also promote in their web shop, for instance, they would promote the product where they have the highest margin to the consumers. So why shouldn't they promote the payment method where they have the least cost, but still a very good conversion to the consumers? And that's why I think it's really up to the merchants, and they can really do a lot to push these payment methods. And what they of course have to take into consideration as well is like localization. So different markets, different payment methods. So you cannot just go there and say, okay, I have these 5 payment methods and I roll them out through all the markets. So it's really depending on the market, and that's why I think it's also important to figure out like with which partner do you want to work, who can really help you in the markets you're offering your solution to. But yeah, I think the merchants really have a very big impact and role to play here.
Absolutely. And we've looked at a range of payment methods already, but we're going to move on to part 3 of the webinar right now, and we're going to focus on the rise of Pay by Bank and why now. Our report found that Pay by Bank awareness across all of our markets was quite varied, which we kind of saw a little bit earlier in the webinar. And this graphic shows familiarity with Pay by Bank as a payment method according to their local methods. So they've got the Netherlands, Spain, and the UK are standing out here the most. But to start off, Luke, why now for Pay by Bank?
We covered a very varied amount of topics here, right? And I think when you summarize Pay by Bank, I come back to 3 core points always. I mean, one is security and the use of biometric security, using your bank as a secure way to sign in and authenticate yourself and make sure that the payment is secure, but also that your details are secure and that you're not having to effectively put in details into a script or into a form that could actually be captured and in a fraudulent way, or with a merchant that perhaps you don't trust. And so Pay by Bank has a very, very secure means to paying. So that's the first thing. I think the second thing that we're starting to see is the cost element. Naturally costs in payments are increasing on the whole, whether that's the likes of card interchange or card types, as well as sort of digital wallets and buy now, pay later with credit interest rates changing. And so cost plays a big part to merchants looking for ways in which they can reduce their costs when they're selling items, but also get that same impact of being able to convert a payment to make the sale. So that's the second part. I think the third part then is about growth, right? Businesses want to have a growth opportunity. That could mean that they go into new markets, and therefore Pay by Bank is a preferred payment method in that market. It might not be in their existing one. So if you took an example like a large business in the UK that's looking to expand in Europe, just offering cards across the whole of Europe would probably be not as successful as if you were to go and offer the payment methods, including Pay by Bank, to the users in said market they were expanding to. So that's also tied to the growth element of optionality and having growth of users and different types of users, perhaps different generations, both web and mobile being a feature in terms of what device they use to check out, where Pay by Bank is very prevalent on those. And so, when you combine all of those together, there's quite a powerful mix of reasons for merchants to start being aware and understanding what are the different providers in the market, what are they going to bring as benefit, what markets are they in, how does it work, but then actually going and adopting it and testing it out, right, and trying it on their site. So those two together, we're starting to really see sort of a lift off. I must say all of this with the fact that it's still very much in its infancy as well. So we're not to get carried away about this, or taking the fact that Pay by Bank as a method, I believe, is complementary to merchants and to consumers, and not a functional replacement for other payment methods. It's very much trying to give more optionality and complement as well, which I do think helps with the adoption. It will just take a little bit more time.
Yeah, for sure. And kind of following on from what you've just said there, some familiarity stats for us to take a quick look at. Specifically, familiarity of Pay by Bank is more than 90% in the Netherlands, UK and Spain, pretty high. 2/3 of Germany are familiar with Pay by Bank, and 1/3 of French are familiar with the payment method as well. So we do have a varied familiarity here. And Manny, what factors influence how merchants choose to offer Pay by Bank alongside their more traditional payment methods for people to pay online?
Yeah. In the end, I think merchants think, on the one hand, revenue or cost driven. So, of course, they want to make money or they want to reduce cost. But on the other hand, they should also always be customer centric. So these are the two perspectives, I would say. And if we look at these two perspectives, and if we compare the payment methods which are there, like traditional payment methods or the Pay by Bank payment method, I would say like wallets or buy now, pay later solutions, as well as Pay by Bank solutions, they are secure, they are easy to use. Some of them are easier to use than the others, and they are fast. So now how do they differ pretty much? From a merchant perspective, I would say, and that is also what we hear from many merchants, that wallets or specific buy now, pay later solutions are very expensive. So from a payment fee perspective, since they also attract maybe also some operational issues, so also operational costs should be taken into consideration here when picking these payment methods. And the cash flow, because that is also what we saw, especially with rising interest rates. The cash flow becomes more and more important to merchants. So how quick do I get my money from these payment methods? And also here, a Pay by Bank solution is very cheap. You get really a good cash flow as a merchant. So it's really, from a consumer perspective, it fulfills all the consumer needs. And from a merchant perspective, it fulfills like even more needs what they have. So that's why I think it's super relevant to add this, as Luke said, as an additional payment method for the consumers. And as we see in the slide, like the familiarity is there, so customers are able and willing to use it. And that's why I would say it's pretty much a no-brainer to use it, especially in markets where there is right now maybe a bit of a vacuum created. For instance, in Germany, where, as also Luke said, like some players are leaving the market and some players are acquired. So that's why I think it's a very important payment method to focus on.
Yeah, I think just to add to that as well, familiarity is critical in order to then drive adoption. So you've got another step in this journey where people may well be familiar, which is the first step. The next step is then, okay, I'm familiar. Do I feel comfortable using it? What we do find, just in our internal data of the merchants and so on that we work with, is that once they've used it once, the need or to use it a second, third time is very, very strong. So the return usage, and I think just talking about Pay by Bank openly is that the familiarity to then get the adoption to then use it time and time again has to, the biggest sort of hurdle is using it that first time. But we do find that once people use it once, they've then got comfortable, they know it's secure, and to all the points that Manny's making, it's kind of frictionless after that first time. So that's where we're starting to see this drive familiarity, adoption, and then share of checkout effectively really increasing over time, and that's something we're tracking consistently.
It sounds like a dream. It's such ease of use to pay, very easy. And we've seen previously some of the consumers are facing when paying online, and also the reasons why they would opt for an online payment method, such as consideration of costs and fees and security being pretty high on that list. And Pay by Bank benefits seem to be ticking a lot of boxes in terms of what's appealing for consumers. We've got 50% of those surveyed would use Pay by Bank because there's no extra cost of fees. 46% would use Pay by Bank because of the high level of security. So ticking a lot of boxes there. But looking more closely at what people see as the potential benefits of Pay by Bank, we can see 1 in 4 respondents like the idea of paying with money that they actually have, not needing to input credit card details or debit card details or downloading an app, create an account, that kind of thing. And they like how transactions quickly reflect in their accounts too. So a lot of features here that our respondents seem to like, but from a merchant perspective again, Manny, actually, we'll start with you, Luke, and then we'll move on to Manny. But what are some of the things that merchants can do to encourage consumer adoption of Pay by Bank?
Yeah, we do see a very direct result from merchants that really sort of embrace it and adopt it and put it effectively higher up the presentment in checkout. So giving consumers a chance to find it. That's the first challenge. I think the second part that merchants can do is really educate and guidepost, right? And there's a balance to be struck there to not overcomplicate. But as we say, the awareness of Pay by Bank is increasing, and it's continually increasing as merchants continually adopt it. I think now it's going to be a question of how do payment providers for Pay by Bank with their merchants work together in a partnership to kind of help drive that adoption, right? And then therefore the share of checkout. So a lot of it comes back down to guideposting for that first time usage. As we say, once we see that first time usage, it really sort of is in the high 90% return usage. That's what we see. So, that's a really promising sign. And I think all these 4 elements here on the consumer side are things that merchants really need to be aware of and not overlook. A simple thing such as transactions being reflected in their accounts might not be the first thing that comes to the mind for a merchant when they're looking internally, but we come back to experience. Experience isn't just the checkout flow, right? I mean, obviously that's going to be a primary part of the experience, but it's also then what happens after the payment. Do I know that it's a bit like shipping. If you've bought something and you don't get a receipt that it's been shipped or it's left the warehouse and it's out for delivery, it's coming at this time. If you make a payment and it doesn't show up in your account, and then 3 days later something showed up, and when does it actually leave? And those are experiences which are a little bit more nuanced, and I think merchants can see the benefit of that through Pay by Bank because it's instantly left their account, it's then recorded and then paid on. So lots to uncover here, but ultimately it's how do merchants and the payment providers for Pay by Bank work closer together to signpost and guidepost to use the method, why to use the method, and what are the benefits.
Exactly, and I think, I mean, Luke touched upon many things already. In the end, I think it's about showing the customer during the journey, but also before the journey, that they have the option, that it's a secure option, that there are no fees involved. Because in the end, the merchant is paying a lot of money to acquire customers. Yeah, they spend a lot of money on Google Ads or on wherever they acquire the customers, and that's why it's super important to really keep the customers on the website. And I agree. I mean, for me, the payment is not just the moment when you click the pay button. It's really the journey from visiting the website until you actually had received the goods, or even further, when you refund the goods.
Yeah, that's a great point, Manny. I mean, refunds is a really, really big piece of this, where the use of Pay by Bank is very interesting, because you can have a lot more of a low cost and speed in actually refunding. And what we find with some of the merchants we work with is that those refund journeys can actually be so critical to keeping and retaining the customer, and then re-spending with your business, which I think we've all been there. If we've used cards, you request a refund, you return some goods or whatever may have happened, and it could be you get that dreaded sort of email to say up to 10 working days, and then you're logging into your account every day to see if you've been refunded, and then you forget, and then 3 weeks later you've got to scroll back through your statements to see how has the payment actually sort of come back to me. So again, it's very nuanced, and it's kind of in that experience journey, and refunds is a really big part of Pay by Bank that can help.
Yeah, that sounds like a crucial thing. Some people need that money immediately for sure. And I think now we're kind of closing down to the last part of our webinar now, and we're going to start looking at some 2025 predictions. So very curious to see what you have to say here, both of you. So we've unpacked some really interesting data points from our report in this webinar, but with that, we're going to continue to look ahead continue to look at the merchant perspective, actually. And Luke, how will the payment mix at merchant checkouts evolve in 2025, do you think?
Yeah, I think there's a few factors that are, impacting what merchants will do. My take is that merchants again are coming back to a place where they're trying to reduce costs, but also increase conversion and increase revenue. So it's trying to find that balance. And I think perhaps adding more payment methods is one way of looking at it, but also being really selective about how do you present certain payment methods to certain users. We've seen lots of merchants look at adopting things like orchestration and smart routing, and how do you actually get into a position where you give the user that is trying to pay for something what they want, right? And the methods that they use time and time again. So I think that will continue to shape, where merchants are looking for flexibility, they're looking for optionality, and they're looking for control, right? And so those factors will continue to sort of roll out. I think it'd be remiss of me not to say that I think more merchants will be looking at Pay by Bank if they haven't looked at it already, and if they have looked at it, then they'll start to get into a position where they actually want to integrate it. So quite often we're seeing larger merchants issue RFPs and sort of more structured ways to understand which providers they want to use to offer Pay by Bank, and I think we'll continue to see that as well happen. The question that I think everyone in our industry is looking at is, will that adoption follow the efforts that the providers who are building the technology and the merchants who are adopting to the technology, will those users actually go and use the method more and more and more? So, will we see that usage increase from single digit share of checkout to sort of low, medium, double digit into higher percentages? And that's going to be really interesting. I think 2025 is probably too early to start seeing that momentum, but most definitely as you start to get to 26, 27, my prediction would be that Pay by Bank will appear more and more on checkout pages.
Yeah, it's definitely going to be exciting to see how that develops for sure. And if we skip ahead, now we've had some really good insights into Pay by Bank familiarity across our surveyed markets so far. Some countries having a lot of familiarity, some not so much. Manny, what are your predictions for the adoption and growth of Pay by Bank this year and in 2025?
I mean, I moved from Pay Later to Pay Instant for a reason. That's why I'm here at Brite right now. So I think Pay by Bank is really, at the start of ramping up, to be honest. And when I talk to the colleagues here, in the past, it was really the case that we had to educate the merchants a lot. Okay, what is pay by bank? What does it do? Right now, the merchants are coming to us, so they are aware of this payment method. So they did their research already, and I think if you just look at the press, there is a lot of things going on in this segment. I think also that we see an increased adoption by retailers and by platforms. So that is all something we already see. Also, the growth in Europe and in the UK is there, and we really hope and we try to contribute to this, that it continues. Also, by the end of 2025, the EU regulation kind of forces the banks to enable instant payments free of charge, because that is also not fully done throughout Europe. So that is also something which will come and which will also fuel the whole process even more. And what I also touched upon before a bit, like more and more customers are a bit more sensitive when it comes to their own, on the one hand data, but also on their own financials. So they are really happy to pay something instant or immediately and not maybe take credit to pay for their stuff. So yeah, in the end, I mean, my conclusion, my prediction would be the future is bright.
Sure. And on that topic, pay by bank is quite a broad term. And if you're in the payments world, you've probably heard it before. But a final question for you, Luke. Are all pay by bank products the same? And what are the differences that merchants need to know about?
Yeah, it's a great point. And I think if you look a few factors, I mean, one is that it's still a very new payment method in some respects, right? So since open banking and the APIs have been made available out of PSD2, the pay by bank products have become more prevalent because there's been more players to be able to get into the market and leverage technology to issue pay by bank in a secure way. Having said that, pay by bank has been around for a long time. So in some markets, and we mentioned Ideal, I mean, there's the likes of SoFort that have been around for many years that do work fundamentally differently to say how some of the players in the market have matured and have built their sort of products. And ultimately it comes a lot down to a few factors. I mean, one is obviously the checkout flow and how that's integrated, and is it frictionless and is it easy to use, and how many clicks do you have to make, and trying to sort of reduce those down and reduce the friction. But I think the fundamental part is how a lot of providers have actually gone and built the money flow. And that's a big thing for merchants is, where is the money going from and going to, and how quickly, and where can I see it? And one of the things Manny and I say quite frequently, and merchants see this, is that no one gets a high five or a pat on the back for a successful payment. But when something goes wrong, that's a really impactful thing for not only the business, but then their customer and also the provider that sits behind it. And so, part of what we're doing at Brite is very much to try and have direct connectivity as much as possible. And what that allows us to do is have more control. And if we have more control, our merchants have more control. Mm-hmm. So, when things happen, we are on top of what's happening. And a lot of products have been built in the market that perhaps have aggregation layers and lots of third parties involved. And it's very normal for that to happen because of how fragmented banking and payments really is when we think about it. But I think products aren't the same. It's really important merchants go and do their investigation and get themselves smarted up on how things work and why they're different, and really challenge the providers in the market to understand how does it work? How does that money go from A to B to C, or however that money travels? And so we push that quite hard onto ensuring that our merchants and prospects understand the differences between, say, a Brite and others in the market.
Yeah, and we actually have a slide that outlines some of the different approaches to pay by bank here. Luke, can you explain this for us and for everybody watching?
Yeah, sure. So I alluded to some of the sort of original pay-by-bank methods, such as Ideal and SoFort and so on. And a lot of the time, these businesses were built where money would be moving from a consumer bank account directly to a merchant's bank account. And great as an initial step. I think some issues that came up with this process was the reconciliation. For example, each merchant would need a localized account for the funds to settle into, because those funds couldn't move cross-border. Quite often they wouldn't be instant, which Manny mentioned earlier, that not all bank accounts in Europe are actually initiated with SEPA Instant. So therefore, the money is in the ether for a period of time, which can be quite nervous for merchants and for consumers. And then when open banking, started to become prevalent and the data started to become more accessible from the banks, that kind of was the first stage where you could actually have an understanding of, okay, payment's been successful, money has left the account and it's landed somewhere and so on. And what a lot of providers in the market do in this kind of V2 that we mentioned is they use a kind of virtual IBAN settlement process. So the funds move from a consumer's bank account in a market, they'll move to that virtual IBAN. And quite often those virtual IBANs aren't localized for the settlement. So, that again can take time and it can be quite tricky to do certain things such as reconciliation and money management and making sure that the merchant knows that the funds have settled. It does help dramatically versus V1, but that's where Brite does differentiate itself in the market with what we call our Instant Payment Network or our IPN, where we have decided as a business and as a strategy to go very deep and direct, right, with our network, and that has two major benefits. One is that because we own that network, it's proprietary, it belongs to us. That is a trusted network. What I mean by that is, the money coming from the consumer's account lands in an account, typically either with the same bank or in the same market at least, to Brite, which helps with conversion and it helps with speed. But the second big part is that we don't always have to rely on the rails such as SEPA Instant or faster payments if we don't need to, because we can actually use our instant payment network to route transactions in a far smarter, quicker way. So that's the biggest difference when you get under the hood, how people have actually managed to build a money flow that can not only help the consumer and their experience, but really help the merchant, right? Provide merchant with, again, I come back to control, flexibility, transparency on costs, but also where the money sits. So, hopefully that helps with a little summary of where this space is evolving. And I do think, this will evolve even further over time as well as people find smarter ways to be able to move money through the network.
Definitely. And speaking of Brite Payments payment offering, for those who are new to Brite Payments and what we do, we're a leading account-to-account payments provider headquartered in Stockholm that use open banking to process real-time instant payments and instant payouts between consumers and online merchants. We're connected to more than 3,800 banks and are currently available in 27 European markets. But as well as being fully licensed, we have our own proprietary instant payments network that Luke mentioned called Brite IPN, and that allows you to send payments 24/7, 365 days a year. And along with this, there are many other consumer and merchant benefits that Brite has to offer. And if you would like to continue the conversation with us on how we could actually work together, we'd love to hear from you. But that concludes the webinar for today. And I want to say a big thank you to Luke and Manny for sharing their expert knowledge with us today. It's been a pleasure. And for everyone else watching, we hope you've gained some valuable insights today. And we'll send an email to you to download our report for more stats to help your business get ahead. And if you'd like to chat with us, drop us an email at info@britepayments.com and to get in touch with one of our payment experts like Luke or Manny, or visit britepayments.com to find out more and read some of our customer stories to see what they have to say. But thank you again for joining us today and have a great day.
Thanks.
Thank you.